traders, Day Trader Matt here with a businesswithtrading.com doing an E-mini trading room recap for the 29th of January, Thursday, and today was a really good day in the markets. Now, it was pretty interesting to see all the choppiness that occurred. First the market ran down, then it got quite choppy, found the low here, and then it chopped up to the upside, and then eventually in the afternoon session it just took off to the upside. It's pretty interesting, closing around 2016. So pretty interesting action today. Today we ended up taking 4 trades and ended up with 20.5 points. So very good day all in all. Our first trades happened on this same bar. They were all within about a 5-minute period. First, we grabbed a long up around 7.5, which is right about here. And then the market started higher, and we took off around 9 even. So right there, that was our first trade. Second trade, the market came down, and we got long at 5.5. We were able to ride that up. And again, same place, taking profit at 9. It's interesting to see the morning open. It's just pretty interesting to see. The market did come up a little bit more than 9 even to 2001.24, and then it started to sell off, getting fairly weak, and then it bought up again, and it entered a really choppy zone. Obviously in hindsight, you can say it was very choppy. In real time, it was looking a little bit erratic once it bought up here, which is usually indicative of choppiness. But in hindsight, it's always 2020. We know the market was choppy. In real time, it was kind of looking like that. It was looking like it wanted to sell off a little bit more. And that's what it ended up doing. Does it always do that? Of course not. Sometimes it looks like it wants to sell off, and it ends up chopping around and then moving higher. Sometimes it looks like it wants to move higher, it changes course, chops around, and then it moves lower. The market's always changing. It's dynamic, and that's why I think you really need to have like a dynamic perspective when it comes to the market. Rather than being in a box. Like I trade this, and that's all I'm going to trade, but I'm going to apply this method no matter what the market does. Stuff like that. I think your trading tools should be a little bit more dynamic, and that's my method. I go over the methodology. I've taught thousands of traders. Not to say anything about me personally, but I know how to do a few things when it comes to the market. So anyway, I don't want to get into that right now. We're talking about our trades. So trade number 3, we were short. Let's see we actually got short down here. So we were short down here, and price drops, and we ended up taking our profit right here at 5 even. So we're short 9.5, and we take profit at 5 here. So pretty nice trade there. After that, we kind of watched things a little bit. We did get short up here, and we were able to take profit on the move lower. From that, we kind of watched things. Price definitely got a little choppy. Same crap as earlier. Just, looking kind of ugly. And then it started moving higher. But at that point, we're not in the trade. I don't really want to get long. Don't really want to short either. We'll just see what it does. I was thinking about shorting this initially. Talked about it in the room. I tried to get in up here. The market started moving lower, and I pulled my order, decided not to. I wanted to get short up here because if, when the market did turn over, you would be able to, quickly move your stop down, and you would be good. So if it did turn over, you'd be safe. If it kept going, you'd be happy. Just because I wasn't really sure what would happen here. I kind of expected a little bit of a reaction, but how big of one, I really was unsure of. So we ended up, the market did come lower. It did not get filled. I ended up pulling the order and it chopped around a little bit and then started moving higher. So it is what it is. Uh, and in the market, like I said, you need to be a little bit dynamic, be able to move as the market moves. Like Muhammad Ali used to say, float like a butterfly, sting like a bee. His anecdotes were actually really cool. I thought he was pretty cool, and he'd be a cool person to meet. If we had a time machine and could go back and meet Muhammad Ali of that day. You know, um, Sadly, the disease has struck in him. But that's a talk for another time. But he's definitely someone that I look up to. Anyway, having that dynamic approach allows you to be able to say, I think I want to get short, but no, I'm not going to. I don't like how the market looks. That's reasonable. What if if I would have said, I want to get short here, I'm going to put in my order, the market came down. Well, when it comes back up, I'm going to let it take me and short. And we were probably trying down here. I'm pretty sure it wasn't like right at 4.5, so we would have gotten a fill just because it went a tick past our entry. That's not what we were trying to enter. We were trying to enter down here. And the market moved down. We didn't get filled, but if we would have taken that, let's say I think it was 375. It might have been 3.5. I don't really remember. But if we would have left our order in, price would have taken us out somewhere either here or here or here. And that's one thing that I go over a lot is how to read the market, how to know what the market's doing. My objective isn't to keep you guys here out of business with trading with like software or, something where you have to rely on me. I teach you everything that you need to know. And I have a lot of students who I've taught and they're now on their own trading. And I'll get emails every now and then. We'll talk every now and then. But it's mostly, because we've built a friendship. It's not because they're asking me trading advice. Because they already know how to trade. I went through a process and they know. And that's what trading should be. I think that's what it should be. I was part of the open source software movement a long time ago. I was a programmer and it was a lot of fun. And trading should be the same way. It should, be a little more open where, someone actually who knows how to trade teaches how to trade. You don't have to rely on a software or you have to rely on their calls. So you have to be with them even though they teach you a little bit of their style. You still have to be with them. And sadly, people pay thousands of dollars for that crap. I don't really understand it. But it is what it is. Anyway, I wanted to highlight a trade that I spoke about the other day, and this was our coffee trade. We got short up here at 169. We took initial profit at 167.20, which made our initial profit $675. And assuming we're trading two contracts, because most of the trades I have multiple orders, and I say I want to enter here. We either enter everything at one spot or we stagger it. That's the way I like to trade. That's the way that I personally trade. So, that's the method that works best, in my opinion. There are a myriad of ways of trading. I'm not saying my way is the best way, but my way works best for me. And I've taught thousands of people, and they do pretty well also. So, anyway, we were able to ride the price down. And we ended up taking profit today at 160 even. That basically gave us, assuming two contracts, a risk of $750 initial risk. But our gain was $675 here initially, and that's within the first probably 7-10 minutes of the trade. We were able to take initial profits, so we were able to book profits, put our stop below break even, and worst case scenario we make a little money, best case we make a little more, and the best case definitely played out. So we were able to take profit here, and that equated to $3,375 per contract. That's actually pretty good. We got in up here around 115-ish on yesterday, and let's see, I don't think we got hit here. I think we got hit here. So around 1 o'clock ish today, we're out. That's a pretty fantastic trade. Altogether, $4,050. Trades like that are really, really good. And it's something that, if you do consistently, you'll make a lot of money at. Because our risk was about 5.4 times what we made. What we made was about 5.4 times our risk. So if you're making 5 times your risk, or we showed 8 times our risk before, or if we would have gotten stopped out, I think it would have been like 1.5 or 1.6 times our risk, which isn't great, but it's better than making half of what you risk, or making a quarter of what you risk. I see a lot of new traders, and they like to take profits early. And there's a reason behind why they do that, but it's not the correct thing to do in trading. Because in trading, if you are able to make 5 times your risk, you don't have to be successful that often. You don't have to be right on the market. You don't even have to be a 50-50 trader. You can lose money more times than you win money, because you're making a risk reward that's just awesome. It just blows everything out of the water. So I wanted to talk about that today. I think it's an important topic. It's something that I could go on days and days and days and talk about, just because it's something that is very important as far as being a trader. And one thing that I want to do, and I would like to start sometime around sometime in the first quarter of this year. I want to do a case study, a trading case study. And basically what I want to do is take a trader that's, maybe you're having partial consistency, maybe you have none at all, maybe you're still losing a lot of money, but you're passionate about trading. It's something that you want to do, and you've tried it out, you've lost a little money. I want to take somebody and document the process. Document, do an interview, like this is where you're at day 1, this is where you're at day 2, day 5, day 10, day 20, day 60, and just document that improvement. And it's something that I want to do. It's a goal of mine for this year. I'd like to do it sooner than later. So if you guys watching, if you're interested in something like that, email me, give me a call here at the office, and just let me know. Be like, hey, I would be interested in something like that. And then we'll chat on the phone. We'll figure out if the process is right for you or not. And if we click, we can go from there. But just wanted to put that out there. If you're interested or not, definitely hit us up here at the office. So anyway, with that, thanks for watching the video. Have an awesome day. Comments, likes, shares definitely will be appreciated if you like the video. You can also email me comments as well. A lot of people like to do that. That's fine too. No such thing as a dumb question. support@abusinesswithtrading.com. With that, have a fantastic day, and I'll see you back here in the markets. Thank you.